Hey Richard, how's everything going?
Great. Yeah. How are you? Happy to be here.
Doing well, doing well. I really appreciate your time. I wanted you to help my audience understand how MicroStrategy's FASB rules work, what the FASB rules are. I've gotten a lot of comments about this. Can you just tell my audience a little bit about you and what qualifies you to, I guess, talk about this?
Yeah. Good question. My professional background has been in large scale capital projects. Canadian based out of Alberta. So, back in 2017, I started a renewable energy utility company. And we were developing grid connected power plants. And part of our strategy was to divest those assets to infrastructure funds. My better part of the last 5 to 8 years has been focused on negotiating and structuring large capital projects and financing terms for those projects. My background has been really focused around establishing financial strategies around capital projects. I have an MBA by training, a strong understanding of the financial industry and really how to read income statements, balance sheets, cash flow statements. Um, so, as a Bitcoiner, I was obviously drawn to MicroStrategy quite a number of years ago. Back in it would have been 2022 was when I was first intrigued by them. Didn't buy as many shares as I probably should have back then, but I have been uh, well allocated in the company for quite some time. Having an interest in MicroStrategy and a strong financial background, I've drawn a lot of interest into understanding the FASB requirements and how that impacts my investments, and have tried to share that out into the broader community.
Amazing. Yeah, that's great. That's exactly what I was looking for. So can you just explain to my audience first what the FASB rule changes mean, what it would lead to, how it would change the landscape, the regulatory landscape for MicroStrategy.
Yeah. Prior to the FASB, the expectation or the requirement for companies that held intangible assets like Bitcoin on their balance sheet was that those intangible assets would be effectively treated as an intangible asset, and they were subject to impairments. So anytime that those assets traded below the carrying cost, a company that had those assets on their balance sheet would have to charge an impairment against the carrying cost of those assets. So what that means is, during the bear market period where MicroStrategy had a bunch of Bitcoin on their balance sheet, and there was a bunch of rumors about them liquidating and defaulting and being margin called and all that nonsense, because they were trading below their carrying cost. So during that time period, MicroStrategy actually had I think it was 2 quarters that they had to record impairments against the Bitcoin that they had on the balance sheet. And so effectively, they have to write down the carrying cost to the lowest point of the Bitcoin price that it traded at during that particular period, and that created a misrepresentation of the actual value of the Bitcoin, regardless of if it traded back up and exceeded the lower point of the carrying period. They would still have to record that impairment. And the painful thing with impairments is that once you record an impairment, you can't write it back up. So even to this day, the company still has those impairment charges on their balance sheet, which just gives a real misrepresentation of the strength of their balance sheet. So obviously, when this was going on, there were a bunch of companies that had these intangible assets on their financial statements, and they were lobbying FASB, which is the Financial Accounting Standards Board. Um, I see a bit of miscommunication out in the community that FASB is, the actual regulation that is being changed here, but It's actually the Financial Accounting Standing Boards that issued ASU 2023-08, which is the particular regulation that changes. And what that regulation is doing is it's new guidance for intangibles and goodwill, particularly with a focus around crypto assets. And what the FASB adoption does is it allows a company to record the actual fair value of the cryptocurrency, in MicroStrategy's case, the Bitcoin that they hold on their balance sheet, to the fair value for that particular period. Again, one of the things with the rollout of the ASU was that the FASB board decided against any sort of retrospective reallocation of earnings and retained earnings for the Bitcoin that's on their balance sheet. So MicroStrategy is unable to go back and amend those financial reports. It's only forward-looking from this time period, and companies had the opportunity to adopt the ASU early, or they could wait until it was mandated. And I think it was December 18th. Any company that has a fiscal year end after December 18th has to adopt FASB. So MicroStrategy intentionally waited until it was forced upon them by industry. So come first quarter of 2025, MicroStrategy will be reporting under the new ASU and reporting their Bitcoin at the fair market value.
Why did they wait until they were forced to do it?
Yeah, it's a good question. I think if I were to speculate on it, under the ASU, for when you write up the Bitcoin, you also have to carry a deferred tax liability. So although you're increasing the assets that are on your balance sheet up to the fair value, it spits out accounting earning. And I have an example that we could run through in a little bit. But when you spit out those earnings, it's accounting earning. It's not necessarily taxable earning. So there is no tax impact to a company. Of course, this everybody knows you can't tax unrealized gains today, at least. We might see how that changes in the future, but I don't ever see that actually happening. So the companies have to carry a deferred tax liability on their balance sheet as well, to effectively produce transparent and fair accounting.
So do you think... Oh, sorry, go ahead.
Yeah. So from MicroStrategy's perspective, because they would be putting a fairly substantial deferred liability onto their balance sheet, it still shows up as a liability. And as you know, with their strategy right now, they're utilizing leverage to acquire more Bitcoin. And, when you're going out and you're trying to raise a bunch of capital, particularly through fixed income instruments and debt instruments, having a substantial liability on their balance sheet is obviously going to impact their leverage ratios. I think it could probably be easily explained away by MicroStrategy saying, we're never selling this Bitcoin, so we're never going to realize that tax liability. But, nevertheless, companies that are going to be signing up to these types of products, they're going to have mandates around who they can't participate with. And one of those mandates is going to be subject to their financial leverage ratios. So, I speculate that may have had some of the influence around why they may have waited until it was forced upon by the industry.
Yeah, okay, that's a great explanation. I actually didn't know that that's the case. Okay, so you said that you have some spreadsheets that you wanted to share. Do you want to go ahead and share those now, just to, I guess, paint a better picture for my audience here?
Yeah, for sure. So this is the spreadsheet that I've produced for MicroStrategy's potential expectation for what we're going to be looking at for the Q1 financial reports. So the first section, what we have is the 2024 Q4 ending period for MicroStrategy's treasury. So as of December 31st, the Bitcoin that they held was 446,400. The average cost base was 62,000 and change, And the important piece here was that the Bitcoin price at the year end of December 31st was around 93,600. One of the things there is, I've looked at Marathon, who previously adopted the FASB ASU, and they don't actually uh, dictate what the Bitcoin price was for the period end. So, we're going to have to wait until we actually see the financial reports from MicroStrategy to see where they drew the line in the sand. I pulled this number as the end of trading hours, after hours for that day. It could very well be, the Bitcoin price at December 31st at midnight, which I believe would be slightly higher than this. But
Sorry,
just
Richard,
for,
do you mind just zooming in a little bit?
yeah, no problem.
Just because then it'll be a little easier to see the numbers and all that. That's great.
So for this example, I chose the 93,600, which gives MicroStrategy fair value again at the end of Q4 of 42 billion. Their Bitcoin cost base was 27.8 billion, which gives them an unrealized gain of close to $14 billion, which is roughly 50% gain on the Bitcoin that they had on their balance sheet at the end of the year 2024. Again, the basic shares outstanding and the assumed diluted shares outstanding play into how we calculate the price per earnings and the Bitcoin per share, or the earnings per share, sorry. So carrying that down to 2025 Q1, currently they hold 450,000 Bitcoin on their balance sheets. That's current as to January 13th. We have to make an assumption around the quantity of Bitcoin that they're going to acquire in the first quarter this year. So I've plugged 60,000 coins, 20,000 coins per month, which would give them an assumed Bitcoin treasury of 510,000 by the end of the period. Again, we have to make an assumption on what the Bitcoin price is going to be at the end of the quarter. So I've, again, plugged 120,000. So we could play around with some numbers there. It's always fun to go through some bull cases, but I think 120,000 is potentially a fair number. And carrying that through, we calculate what the average cost of that Bitcoin is going to be based on their newly acquired coins, which are going to be at higher value. So that's going to drive up their cost base. I'm assuming that the average cost of new coins acquired in the first quarter is going to be roughly 106,000, which is just the midpoint between the start of the period and the end of the period. Again, all we can do is make assumptions on this stuff right now. But that would give, based on these assumptions, would give MicroStrategy treasury a fair value of 61 billion at 120,000 per coin, and a cost base of 35 billion for an unrealized gain of 25.7 or 73% unrealized gain on the Bitcoin that they've acquired. We know that their strategy to acquire more Bitcoin involves dilution, and whether it's the ATM or through fixed income instruments, there's a high likelihood that there's going to be a fairly substantial dilution through that time period. So that again plays down into the output of those financial statements. So the ASU is going to impact both the income statement and the balance sheet. So earnings, of course, flow through your income statement. And what I've presented here is looking historically at the prior 4 quarters, which of course is a requirement for the S&P 500. So the only requirement that MicroStrategy doesn't meet right now is positive earnings for the sum of the prior 4 quarters. We don't know what their earnings is going to be for the 4th quarter of 2024. So I've made an assumption there. The most logical thing I thought of doing was just assuming the same earnings as Q3. I expect it would actually be a little bit less than that, but we'll find out first week of February. So based on the assumptions that we had previously, the uh, the ASU FASB earnings that would be reported in Q1 would be 13.4 billion, which of course more than exceeds the required earnings to satisfy the S&P 500. Analyst earnings for that fourth quarter of 2024 is 120,000 or $120 million loss, and the earnings required for the S&P 500, based on this assumption for the fourth quarter, would be the 782,000 or 782 million, which only requires a Bitcoin price change from the beginning of the quarter to the end of the quarter of $1,500. So based on where the Bitcoin price is trading today on January 14th, MicroStrategy would qualify for the S&P 500. So the fact that
Wow.
we ended December 31st, a little bit suppressed, if you even want to say that, it sounds silly to say suppressed, trading, above 90,000 per coin. And that's, again, this number, the 15,000, is based on our assumptions that we've made around the new Bitcoin that's acquired and the price, or actually not the price, but just the new Bitcoin that's acquired. So the more coins that they acquire in the first quarter, the lower this number for the S&P 500 actually becomes. So if they didn't acquire any more Bitcoin from today on for the quarter, with our 450,000 coins that they have in treasury, we only need to see a price change of about $1,740 to qualify for the S&P. So based on these assumptions, we're going to see earnings per share of just under $50, $48.88, based on shares outstanding, and fully diluted of 42.35. Looking at the balance sheet, the way that the ASU works is that only the period over period reports to the income statement. So even though MicroStrategy has acquired a ton of Bitcoin in the past, that Bitcoin earnings up until December 31st doesn't flow through their income statement. All of that gain that we saw up at the top of the spreadsheet, the 13.9 billion, at the period ending of the fourth quarter of 2024, will actually flow directly to the balance sheet in retained earnings. So MicroStrategy will report roughly 13.9 billion based on this rough calculation, which is a stockholder equity increase of close to 370%. So that will surely get some attention. Based on the conversation we had earlier, we have to take into consideration what the potential deferred tax liabilities are going to be on the earnings as well. So the assumed tax rate for MicroStrategy is somewhere around 28 to 29%. I've carried 28.5. Again, we won't know it until we actually see it. And that would produce deferred tax liabilities on the retained earnings component that's going to hit their balance sheet up until the end of 2024 of 3.9 billion. And for the earnings that they potentially report based on our assumptions here for the first quarter of 2025 is going to be an additional 3.8 billion. So that is going to add a deferred tax liability of $7.8 billion onto their balance sheet. So if you think about that in the context of them going out and trying to raise this additional fixed income or raising capital through debt instruments, that's a sizable liability that's added to their balance sheet. I think it's pretty difficult to explain away that, even if, the mantra is going to be never sell your Bitcoin. The reality is they could. And I think it's going to be very difficult for anybody who's going to come in and sign up for those fixed income instruments to, just ignore that significant liability. So that's why my assumption was that this is why they've kicked or waited to adopt the ASU because they wanted to
Ah,
lever up as much as they could in that time period and avoid that discussion and that negotiation, because that's going to impact their financial leverage ratios.
but I guess the good thing is that as Bitcoin's price goes up, they have to sell less and less Bitcoin to fulfill this liability at some point.
100%, yeah. And in reality, if they're never going to sell their Bitcoin, they're never going to have to fulfill that liability. It's just simply accounting that
Yeah.
you're reporting that deferred tax liability. Um, so, I have a note there in MicroStrategy's recent 8K for year end. They had an estimate of 12.7 to 12.8 billion dollars that they were going to report in retained earnings. I have 13.9 here. They're obviously accounting for the impairments that we talked about before and both tax assets and liabilities that are currently on their balance sheet. So once you factor in those numbers, the retained earnings is going to be slightly less than we've calculated. There's obviously more that goes into it than this simple spreadsheet. And the other thing here too is that the deferred tax liabilities is going to impact the net asset value multiple, which of course is a hot discussion within the MicroStrategy community. So, um, I think forward looking, I would personally back out that deferred tax liability from MNAV on the assumption that MicroStrategy is never going to divest these coins.
Yeah, that makes sense. I feel like that shouldn't be, I don't even think that should be a consideration. If you understand how Bitcoin works, if you understand what MicroStrategy's, Michael Saylor's goal is, I feel like those things, the liability shouldn't really make a difference in people who are investing in MicroStrategy, but maybe for bondholders it's different because they have to consider more, there's more risk there. So,
Yeah, absolutely. So if we wanted to play around with some, bullish scenarios and see how that impacts the earnings per share as well as the earnings overall, we can go back up to the treasury and play with our assumptions for the end of the quarter. Um, so I have my own financial model with MicroStrategy. I think anybody who is deep in the investment should go out and build their own financial models, make their own assumptions of where the company is headed. Based on my model, I'm assuming that MicroStrategy could sign up close to $12 billion of convertible bonds in the first quarter, and taking into consideration that they currently have $7.2 billion of CBs that are on their balance sheet. Uh, all but one of them are currently eligible to convert, and all but one of them are trading well above their strike price to convert. And I think the bondholders are, primarily CB ARBs, so they're arbitraging and delta hedging their position and that long call that's embedded into the convertible bond. And because they're so far past the strike price, the delta on that long call is close to 1. So the profitability that they have on those convertible bonds is less than it would be if they were to renew those bonds. So I think that those guys are quite incentivized to convert and sign up for new instruments where they're going to have more ability to arbitrage the delta as price fluctuates. So, we'll see probably, in my opinion, $4.2 billion of convertible bonds come off the balance sheet through conversion in the first quarter. And, we've heard Michael Saylor say that the company is under levered, and, adding an additional 12 billion gets them closer to their target of 25% leverage. So these were my assumptions, and I think they're highly motivated to add as much Bitcoin to their balance sheet as it could. So based on those numbers that I've calculated, they could potentially acquire an additional 187,000 Bitcoin in the quarter, which would be
wow.
roughly a 42% Bitcoin yield for that quarter. And again, if we look at how they performed in 2024, they produced a 74.1% Bitcoin yield on the year. and a 48% yield in the fourth quarter alone. Because of course we know a significant amount of that Bitcoin came in the fourth quarter through these instruments. Even if we were to take the assumption that they're going to match their 2024 Bitcoin yield of 74%, and we spread that equally over the 4 quarters, that would be an 18% Bitcoin yield for the quarter, or roughly 84,000 Bitcoin. Just for fun, I'll plug the 187, which would be, again, a 42% increase, a Bitcoin price of 120,000. Do you want to change that number?
Yeah, go with 150. No, actually, let's go with 150 first. Just for the sake of this.
So that's a $56,000 change in the Bitcoin price for that period. 60% gain. And remember the prior conversation around the earnings required to meet the S&P 500 was roughly, less than $2,000.
Yeah.
So, we're blowing it out of the water here. So if we come down to the earnings, these assumptions would produce $36 billion in earnings in the first quarter alone. That would, put their Bitcoin treasury at close to $100 billion, which, is mind-boggling. Their cost base, again, has gone up with the additional Bitcoin they've acquired and the higher price of Bitcoin. So the Bitcoin, unrealized gain is $35 billion. How that rolls out down here is a earnings per share of $130, shares outstanding, or 117 fully diluted, which is quite astronomical.
What if we go with 100K? Or what if we go with what if the prices move sideways? So we'll go with 96K.
Yeah, so 96,000, price change is 2,400. So the big thing here, if we come down and take a look at the earnings, we're producing $1.5 billion in earnings. Depending on what happens with the fourth quarter, what we need to be producing is close to 750 million to qualify for the S&P. Based on these numbers, the earnings would get us qualified for the S&P 500 with a sum of the prior 4 quarters of 750 million. But the big thing there is going to be determining where the line in the sand is drawn for the Bitcoin price on December 31st. If it's higher, we potentially get squeezed there. Maybe you don't have the positive earnings for the prior 4 quarters. If it's potentially lower, that's more favorable. So it'll be interesting to see what's actually reported in Q1.
Yeah, that makes sense.
So I think, again, one of the things to be keeping an eye on is what happens with these instruments. So if we do see $4.2 billion of converts actually convert, that's obviously going to have a pretty significant impact on the shares outstanding. So in addition to, what MicroStrategy is doing with the at-the-market share offering. So they still have roughly $6.5 billion on the ATM that they had under the 21-21 plan. I would assume that they would be looking at creating another ATM instrument when that one is exhausted. Potentially they don't do it until they've fulfilled the entire debt component of the 21-21 plan. But, we'll have to wait and see what happens there.
Are you able to talk about... Oh, no, go ahead.
No, go ahead.
I was going to say, are you able to talk about why they are issuing preferred stock?
I think they're just looking to create another instrument that they can put out into the market. The more investors they can meet demand to with these instruments, the more opportunity they have to acquire Bitcoin and be accretive to shareholders. I think the pref stock is interesting. I'm quite excited for that instrument to actually be rolled out and see what their strategy is around it. I've heard a lot of talk about, um, pretty significant dividends that are going to be paid out on this preferred stock. I'm a bit skeptical of that. I'm in the camp of it's likely to be 2% or less. Um, the preferred stock, of course, is going to impact our earnings per share as well. So earnings per share is always calculated based on the common stock. So if there is a sizable dividend, that dividend has to be paid out of earnings in the period, and well, it doesn't impact the earnings that's going to be reported on the income statement. It will impact the earnings per share, which is calculated based on the common stock. So, um, I think that's one thing that people are going to have to keep an eye on when they're, throwing out their own earnings per share projections. Um, I think that the pref stock is likely to be structured similar to the converts. We've seen in the announcement of the preferred stock that MicroStrategy is going to include a conversion to common for the preferred, and I, I'm in the camp that thinks that these pref stock is going to be largely satisfying similar clientele to the CVs. If there is opportunity to convert into the common stock, there is an embedded instrument in there. What's going to be critical is determining what the conversion ratio is, and if that can be defined at the time that the preferred instrument is issued, because that's a critical piece to actually creating that call option that's embedded in the financial instrument. And there is a preferred stock arbitrage market, just like there's a convertible bond arbitrage market. The reason I tend to lean this way is, if we're looking at issuing $2 billion of pref stock and, looking at paying a 7 or 8% coupon on that or dividend, I think, it gets very expensive for MicroStrategy, whose, primary cash earnings is coming from their software business. And if they're also servicing debt, although, we've seen the most recent uh, convertible bond was issued at 0% coupon, and the rest of those bonds I expect are going to come off in the first quarter. It'll be interesting again to see what new converts are structured and if there's debt servicing that's tied to those. But a sizable dividend on the preferred stock would have to be paid through the ATM. We'd have to be raising capital and issuing shares to service that preferred stock, and it makes the ability to make that instrument accretive to shareholders more challenging, because one of the things with the ATM is you don't know how much capital you can raise in the future through the ATM because you don't know what the share price is going to be. So if we are setting up perpetual preferred stock that's potentially going to sit there for 5 years and it's going to be termed out over a long period, if we have a bear market and we see MicroStrategy trade down to $200, whatever it might be, I don't know if that's ever going to happen. But the amount of shares that you need to sell to service the dividend on that preferred stock would increase dramatically. Which the more shares you sell, the less accretive it becomes to shareholders. So I think it makes having a high dividend on the preferred stock would make that higher risk for MicroStrategy for this instrument to remain accretive. I think it would be much more beneficial and risk managed if these pref stock instruments were structured similar to the convertible bonds, and they're trying to target the pref stock arbitrage market, which is largely similar, same players as the convertible bond arb market. So it could be even the same group of investors that are going to be signing up for these.
They could potentially pause the dividends on the shares, no, the preferred shares, but they I don't think they can do that for, well, they can't do that for bonds because bonds have a contract that they have to pay the interest. But I think with preferred shares they can.
They do have an option to do it. Again, depending on what's written into the instrument, but typically the preferred shares do have an ability for the issuer to pause the dividends. I think the challenge there, of course, is if you are a preferred share or a preferred stockholder, you obviously don't want that to happen. And if you think that there's a remote possibility that is going to happen, um, you know, you're unlikely to want to sign up for that preferred stock instrument, particularly in the current environment that we're seeing right now, where uh, bond yields are increasing significantly. So the opportunity cost to sign up for a preferred instrument with MicroStrategy that potentially has the dividend drawn back or paused, versus going out into the market and signing up for a U.S. Treasury at 4.5-5% is a totally different risk profile. So if you're looking at issuing preferred stock and you're trying to satisfy the fixed income market of insurance companies and pension funds, those companies are primarily seeking low risk fixed income and a reasonable dividend yield. And I think for MicroStrategy to be competitive in that market, although it's much, much bigger than pref stock ARB, I think they would really struggle to actually be competitive, to satisfy that large of a dividend yield.
Mm, yeah, okay. Is there anything else that you want to mention about the FASB rules change, about MicroStrategy, anything that you thought would be important for my audience to know?
Um, I think if we look at the earnings per share, there's a lot of discussion around potentially revaluation of MicroStrategy based on FASB, and you know I'm largely skeptical that is going to happen. We're hearing a lot of talk about the S&P 500 average PE is I think 22 today, and MicroStrategy should be trading at a 22 times earnings multiple, and I'm skeptical of that ever actually happening. I think
Mhm.
that the one of the things that is overlooked by a lot of MicroStrategy investors, in my opinion, is a finance concept called quality of earnings. And the big thing with quality of earnings is the reliability and sustainability of those earnings into the future. And albeit I'm a MicroStrategy enthusiast, I'm exceptionally long MicroStrategy. I just don't see that being credible. I don't see it being a credible argument, um, until potentially, uh, the Bitcoin cycle theory breaks.
Mm,
But with price to earnings, if you know that Bitcoin trades in a cycle and there's going to be a bear market, the company is going to be producing negative earnings potentially for up to 2 years at a time. And to assign a earnings multiple of 20 times price to earnings on a forecast where you see potentially negative earnings multiple times is difficult for me to wrap my head around. MicroStrategy has no influence over these earnings. They don't have the direct ability to operationally impact the price of Bitcoin. So, whereas a company like Microsoft, for example, they have a significant ability to impact their earnings into the future. And the quality and reliability of those earnings is very high. Like the number of companies that are using Microsoft Office Suite and are on annual subscriptions or monthly subscriptions, and that's a very, very sticky product. Investors have high confidence that Microsoft is going to be producing these earnings into the future. And a forward PE, is based on the next 12 months of earnings. And investors who are buying a PE of 20 are effectively buying 20 years worth of earnings. And, if you factor in time value of money and you apply a discount rate to those earnings, they're more likely buying 26 years of earnings on a PE of 20. So, when I carry that over to MicroStrategy, I just don't see how that makes sense, based on the predictability of the earnings, especially, considering MicroStrategy doesn't have the ability to impact those earnings. Maybe if
I think
they start producing products around their Bitcoin and they're able to actually generate cash flow, because high quality earnings are backed by strong cash flows. Until they have a cash flow that accompanies those earnings, because right now they're purely accounting earnings, right? They're not producing significant cash flow behind those earnings. Until that happens, I am highly, highly skeptical of the earnings per share to really create any sort of repricing event for MicroStrategy. That's not to say that a bunch of algorithms, get red flagged at the end of Q1 and MicroStrategy has produced the sizable earnings and massive change period over period, and a bunch of algos start to trade the stock. I think that that's probable, but I don't think that that's sustainable, and I don't think that's going to keep the earnings per share high for a long period of time.
Yeah, that makes sense. I think part of the reason why some people think that I mean, I'm in this camp. I don't know. Like, I agree with you. I agree with what you're saying. I think that quality of earnings is extremely important, but I also feel, maybe I'm wrong here, that the way that Bitcoin works, the price could go 10x overnight.
Yeah.
Because if there's I think price is going to catch up to demand. I think price hasn't caught up yet. I think right now, there's just a lot of people who own Bitcoin who are willing to sell it. But overnight, let's say the US announces a strategic Bitcoin reserve, and then China announces one, and then Russia announces one. Like, well, what would that do to the price? I feel like that's what people are, I guess, thinking about. And then on top of that, the way that I see it, US dollars, I mean, they're basically fake money. And that's what we're valuing companies on right now. I don't think, in terms of US dollars, Bitcoin is literally priceless. So the fact that MicroStrategy has 2%, 2.5% of the total supply of Bitcoin to ever exist, that, how do you value that? I don't even think you can assign a price to earnings ratio to that.
Yeah, I totally agree. And you bring up a good point that um, the money is fake, right? Like, investors who are buying companies at 20 times price to earnings are not doing it consciously thinking that that's a reasonable valuation, right? They're not buying 26 years of future earnings. They're not
Yeah.
consciously making that decision when they buy that. The large reason why we see these massive price to earnings multiple is because the currency is being debased and capital is flowing into these large indices where these companies are constantly getting used as a store of value, as opposed to credible investors buying their earnings based on their productivity. They're using these indices and these companies as stores of value to hedge against inflation or beat inflation. It's not, there's not logic around it. So maybe that's a counter argument to my prior thesis that MicroStrategy won't trade at these high multiples. Maybe they eventually get into these indices, they get into the S&P, and they start to really grow, and we just see that through passive investing. But from a logical standpoint, and them not being currently in the S&P, sure they're in other indices. I just don't see that necessarily happening. And the other side of that argument too is, like, the higher we see the price to earnings multiple go, the NAV multiple is going to increase as well, and that's just more fuel for MicroStrategy to deploy their plan, leverage the at the market offering, and drive that back down. So, the sustainability of it, I just don't see it happening.
Yeah, I just Googled something quickly. The average holding period for stocks in the U.S. is around 6 months. So if you're, let's say for example, if you're buying Apple right now, their PE is 40. So you're buying, they're basically going to be able to earn what you paid them for the shares in 40 years. Like you said, based on inflation and all that stuff, maybe a little bit quicker because their prices are going to rise. But right now, the average holding period is 6 months. In the 1960s, it was 8 years, and it seems like it's partly because of mutual funds, so people can trade in and out. The commissions, there used to be a fixed commission. I believe it was a percentage before for how much stock you bought. So people were thinking, oh, there's gonna be that exit cost and there's gonna be a purchase cost, so people didn't trade as much. And now, of course, there's the exchanges and high frequency trading that allow people to trade faster, allow people to not have to call into a broker to trade. So I think because of that, people are trading more and more. So I don't know. Maybe my point here is maybe things change over time, right? Maybe these numbers just keep going up because more and more people become speculative until MicroStrategy is insanely massive.
Yeah, for sure. Though even in that scenario, I think like the price to earnings people who are really adamant that it's going to revalue MicroStrategy are missing the point of what MicroStrategy is doing. Like price to earnings is a fiat metric that's used to value the profit and loss of a company. And
Yeah.
MicroStrategy is not trying to grow their P&L. They're trying to grow their balance sheet with the purest
Yes.
form of capital. And I think, price to earnings is just the wrong metric to be able to look at a company that is growing their balance sheet as a priority. To me, the NAV multiple is a much better metric for forecasting and determining the value of that company. Um, I think
Yeah.
the NAV multiple also stays relevant in a period where Bitcoin is potentially trading down or trading sideways. If analysts are looking at the company, the price to earnings forecast like requires analysts to make a prediction on what the price of Bitcoin is going to be in the future. So I don't know if MicroStrategy will ever actually have a price to earnings forecast that's going to account for the Bitcoin on their balance sheet. Analysts may only look at the software business because that's the only thing that's really predictable. I expect we'll have a trailing PE, of course, but a forward PE, it's likely that we'll see not material for MicroStrategy.
What kind of businesses do you think MicroStrategy could start? I mean, obviously, Bitcoin is capital. It's money. It's like you said, it's the purest form of capital. What do you think they could do with the Bitcoin?
Yeah, it's a great question. You hear a lot of talk about MicroStrategy creating a bank. I mean, they're effectively doing that today with these financial instruments that they're selling into the market, satisfying different types of investors. Um, I think you could expand on that. I think, one of the risks there is potentially leveraging those coins, lending them out. I think that opens up a whole new door of risk. It'd be interesting to see how that gets shaken out. I think one of the things that is going to have a pretty significant impact for MicroStrategy under the Trump regime is going to be the very probable repeal of SAB 121, which is going to allow the Bank of New York and JP Morgan, whoever else, to actually hold that Bitcoin. I mean, they can hold it today. They just don't because it would impact their leverage ratios because they have to record a liability under the existing SAB 121. So the repeal of that would allow a lot more financialization of those Bitcoin instruments. So MicroStrategy could just simply change where their Bitcoin is held, transfer it over to a Bank of New York, and that starts to form part of BNY's balance sheet, where they're able to capitalize off of their balance sheet and potentially return a portion of that yield back to MicroStrategy. That could become you know, I hate to use the phrase passive income, but that could become passive
Mhm.
income for MicroStrategy. I think there's also possibility of developing Bitcoin native instruments. You know, I think MicroStrategy had uh, the Orange product that was, I believe, digital identity, which I think is a very interesting space that, I'm not sure how exactly they would capitalize off of that other than providing liquidity to operate the system, and that liquidity is generating a yield, similar to how layer two Lightning Network or Liquid works. You could potentially see them playing in that space as well. Though, I question without scale how much income you could generate from something like that. Um, you know, it would be interesting to see something like partnering with a company like Square, who has a distribution network already, and is a Bitcoin treasury company, and having that point of contact, scaling a distribution network and being able to implement liquidity and generate yield through a layer two Bitcoin protocol. But yeah, I mean, time will tell. I haven't heard any clear thoughts on what they could or couldn't do, so it'll be interesting.
Yeah, I think the next 10 years are going to be extremely fun. Going to be regardless of whether you hold Bitcoin, whether you hold MicroStrategy. Maybe for MicroStrategy holders it'll be a little bit more fun, but even with Bitcoin you're going to still get those I'd say 40-50% returns, maybe down to 35. I don't know if it'll be if the returns what do you think? Do you think we're going to see diminishing returns over the next 10-20 years?
Yeah, I think it's natural.
Hmm.
I think like the higher the price goes, the harder it is to generate a significant yield on it. I also think, particularly with Bitcoin, there people, don't sell their Bitcoin unless you're a
Yeah.
trader, and I think a lot of traders are going to realize that they're not doing Bitcoin right. They're you shouldn't trade your Bitcoin. You should put it in a cold wallet and forget that it exists. I mean, that's how I treat my Bitcoin. I think that's my recommendation to a lot of people is, even before MicroStrategy, you should have a significant allocation to Bitcoin and put it in a cold wallet and forget that it exists. Look at it once in a while.
I was going to say wouldn't that change the diminishing returns because people aren't selling? They're not giving their Bitcoin away because what are you going to buy with it? Are you going to buy Are you going to buy dollars? Are you going to buy rental properties? I mean, of course, you need to sustain your lifestyle, but at some point, your Bitcoin stack is going to be so big that selling 0.0001 is going to be sustaining you for an entire year.
Yeah, no, that's a great point. That's a great point. Yeah, valid. I mean, also, if you look at strategic Bitcoin reserves, and I'm also in the skeptic camp of the U.S. government actually implementing a formal strategic Bitcoin reserve. But
Oh, really? Wow. Okay.
if that were to happen, I think obviously Bitcoin is going to go astronomical, and
Yeah.
that triggers a whole series of dominoes around the world of nation states having to acquire as much Bitcoin as they can as quickly as they can.
Yeah. And over time, more and more people buy Bitcoin with the intention of never ever selling. Like there's more. So as more people who are willing to sell, like let's say with the price, with what happened yesterday, January 13th, price went down to what, 89,000?
Yep.
Who knows? Maybe it'll go lower. I don't know. I have no idea. But it seems like it went to 89,000 and it came right back up to 96, 97, which is a massive bounce. I mean, I don't know if that'll be the sustained pattern of what happens over the next coming years. So let's say it moves sideways, then it staircases up, then it moves sideways, goes up, moves sideways. Who knows if that's going to happen? But I feel like I think at a point it's inevitable because the sellers will run out. At every single price, the sellers run out. There's fewer and fewer people who are willing to give away their Bitcoin at a certain price. Of course, when the price comes back down, there's going to be people who are forced to sell, who get worried, who are over leveraged, and they have to sell. But eventually, let's say this cycle, if Bitcoin's price drops to $30,000. That's a double from the last low, right? And over time, the way that I see it, as more people understand how Bitcoin works with institutional adoption, institutional investors are they're more informed. They don't make dumb decisions. They don't make impulse decisions. I mean, some of them, of course, do, but I feel like their conviction can't be questioned. Like they have a different level of conviction based on, compared to retail investors. Retail investors will sell just out of fear. Institutional investors are going to buy more if the price drops.
Yeah, I mean, we see this weird dynamic now with Bitcoin, and it's people trying to figure out what Bitcoin is and how it should be treated, and we see the price action work alongside Bitcoin trading as a risk asset, but also Bitcoin trading as an inflation hedge. And you see something like a hot CPI number come out, and a lot of people are looking at that as forecasting that cuts are Fed cuts are less likely, which is a bearish narrative to risk assets. So you see Bitcoin tank, but then you also see a lot of people start to flood back into the market because that exact narrative is a high inflation narrative, and it creates this buying pressure for people who are viewing Bitcoin as an inflation hedge. So it seems to be like kind of in this weird state because people don't know how to treat it. There's still an old, I say old, the asset is 15, 16 years old, an old mindset of Bitcoin being this tremendously risky asset that should trade alongside TQQQ. But I think that narrative is starting to shift more and more and more as people really start to understand Bitcoin. And particularly to your point, a lot of these institutional investors who are now looking at it as digital gold, but better, and starting to treat it more as that inflation hedge that you want to have exposure to in a high inflation environment, which from my perspective, I think we're in a time of fiscal dominance where inflation is going to be the narrative of the decade. And if you don't have scarce desirable assets, which Bitcoin is going to be the fastest horse, you're going to be struggling. You're going to be left behind. You're going to be destroyed by inflation.
Yeah. Yeah. And it's going to be a scary time for people who don't really understand this or own it. I want to ask you a question that I ask all my podcast guests. So the question is, what do you think is the most important downstream effect of Bitcoin? Let's say 10, 20, 30 years from now. How do you think Bitcoin is going to change the world?
Yeah, it's a good question. I think, first and foremost, I think sound money principles force accountability, and it forces accountability in individuals, governments, corporations. Where we've been for the past whatever my lifetime and beyond has been in this irresponsible fiscal regime of high time preference, where decisions are made, only looking at what's good for this year or the next 2 years, which is accentuated by us living in a political regime where our leader changes every 4 years, our philosophy around what's right for the world changes every 4 years, which just drives this high time preference that erodes accountability. It creates inefficiencies in government. It produces an environment, prime for overspending. Accumulation of debt enables irresponsible financial behaviors in individuals, corporations, and the government. Most importantly, I think Bitcoin, with its sound money principles, starts to unwind that, and I think we're starting to see that happen a little bit. But we're far, far, far from. And I think fiscal dominance is going to be something that will be the narrative of our lifetime. Um, there is no. Lynn Alden has the phrase, nothing stops this train. I believe that to be true. I think it's gone so far. The deficits have gone so far that you can't just unwind it. All that you can do is try to inflate away the deficit and continue to spend and support this fiscal dominance regime. And if we are able to Trojan horse the government and the financial systems with these sound money principles through Bitcoin, I think it creates a better future for the next generation, and I think it drives more transparency and fiscal responsibility.
Yeah, there's no. I think the best way that I guess the best way for them to think about it is to just ignore that there's a problem in the first place and just keep doing what they do.
Yeah, I mean they have no other choice. Like the alternative is much uglier than a high inflation environment. Like the only way to get out of this is to either have a Great Depression scenario, which
Yeah,
creates pain for everybody for a long period of time, or you inflate away the debts and hope that you can create a productivity scenario and a growth scenario that outpaces the inflation and allows that inflation or that debt to be inflated away. And that is painful to a lot of people, but not everyone. And it happens over a slower period of time. It's less abrupt, it's less impactful um, in the immediate sense, and it happens discreetly, right? So I just, I'm still in the camp, even where, the bond yield curve is today, that people are starting to forecast rate cuts in the U. or sorry, rate hikes in the U.S. in
wow.
2025 with the rates where they are, and I'm in the camp where we're likely to see 100 to 125 basis points of cuts because that's what happens in a fiscal dominance regime, and they'll find some way to spin it um, where they're trying to maintain stability in the financial ecosystem.
Yeah, yeah. There's always going to be ways to make it sound like it's a good thing. Rich, I really appreciate your time here. I really appreciate you coming to my podcast, explaining all these concepts to people. I think there were a lot of things that I personally learned there. I'm gonna have to probably listen to this a couple of times just to wrap my head around all those FASB changes, all the things that could actually impact MicroStrategy's price over time. Any last things that you wanted to mention to my audience?
I would just say there's a lot of noise out there. Um, develop your own conviction on whatever it is that you want to invest in. Do your own research. Have your own opinions. Don't just blindly listen to what you hear. Think critically and think for yourself. Do what's right for you. I see a lot of people who a lot of pain is created by groupthink and following the herd and chasing gains, seeing other people's portfolios and trying to replicate that. And take a step back, slow down, and think for yourself. I think is the most important thing.
Yeah, that's it.
It's going to get crazy this year, I think.
Yeah, I agree. Oh, actually, I want to ask you one last question. What do you think? What's your price prediction for 2025?
Yeah, I mean, if you take a strategic Bitcoin reserve out of the equation, um, I still think that there's going to be a lot of tailwinds for Bitcoin through a Trump regime, regardless of an SBR. My base scenario is 220, but I
Okay.
think we could see a blow off top of 275. I think that is not out of the question.
Yeah.
If you get a strategic Bitcoin reserve higher,
Yeah, that's completely reasonable. I think that makes sense. I feel like 275. I actually think 275 is a very good number. I do think we could hit 1 million if the strategic Bitcoin reserve does work out.
yeah, I mean maybe like 990,000.
Oh yeah,
I don't
and
think
then
we'll
bounce
break
right
the
off.
million, psychological barrier, but
Yeah,
yeah, I think I would tend to agree with you. I think it could go much higher than our minds could even comprehend in that type of a scenario.
yeah.
Like we
Even
just
if it,
we don't understand true scarcity yet,
yeah,
and
that's it.
even Bitcoiners who believe in that scarcity and are their conviction is developed around that scarcity to see it actually play out in an environment where it is truly, truly scarce and highly, highly in demand. I think higher, faster for sure.
Yeah. Do you think if the price even does go to those levels, do you think you're going to sell?
No, I mean I have a portion of Bitcoin that I will never sell. I think I'm firmly in the camp that the fiscal dominance scenario that we are living under is going to carry on perpetually into the future. And until I see signs that we're no longer or headed out of fiscal dominance, I don't have kids right now, but I plan on having kids, and I would much rather be able to pass that Bitcoin down future generations to give peace of mind, because I think these scarce desirable assets are the only way to opt out of a fiscal dominance regime.
Completely agreed. I think that's a really great way to put it. Richard, I just want to have you just mention your own where people can find you. Just plug yourself, just because I know people definitely found value in what you've been saying today. Where can people find you?
Yeah, I'm only on X, formerly Twitter, Richard A. Haas. So just like maybe we can tag me, but RICHARDAHAAS, a lot of A's, good German name. But
Yeah,
that's where I am.
perfect. I'll link it in the description just so people can find you. That's great.